Today is Thursday, December 4th, 2025. And once again, we are rocking the screenshots because I don't want to risk recording a whole video twice or three times and then having it delete. So we're just going to rock with the screenshots right now. My plan is to eventually start doing some live streams, but I kind of want to hold off on that until I at least have like some consistent viewership. Obviously, I have like 1,060 subscribers right now, but I mean, subscribers don't really mean anything because you can have 1 million subscribers but only get like 1,000 views a video. So I kind of want to wait until I get like a consistent number of likes and like people actually watching the videos in terms of like watch time and all that before I actually start live streaming. But basically how that's going to look is I might pull up like TradingView or Robinhood Legend, take a look at charts, take a look at the news side by side, and basically just react live to things or answer like questions live. Basically like what I do in these videos, except it's not really going to be edited. Or maybe I'll do like a members only type of thing. I don't know yet, but today I am up 1.32% on a day where the Nasdaq was like slightly red. I think the market was basically flat, and most of that is off the backs of Robinhood, of course. I'm so lucky that Robinhood is my number one stock because this stock just does whatever it wants. Like crypto was down, the market was slightly down, but for some reason Robinhood is up. It's just, I don't know. And over the past week I am up almost 5%. Past month is 2.8%. Past 3 months is 20.41%. Year to date is 132.13%. Past year is 121.56%. And all time is 473.62%. When it comes to my recent transactions, I think the only thing I did today was buy a little bit more of Kava. So I bought 20 shares of Kava today. And you guys will see here in a bit, but I did also take back my ETH. So I did sell my ETH, but I left the profits in Ethereum to just continue staking. So it's only a tiny fractional slice of Ethereum, but I'm just going to slowly trade my way into crypto. I don't really want to buy heavy into crypto right now, especially after it's had this huge run. I don't think it would hurt my account too much if I just dabble in it, trade my way into a little bit of Ethereum and Solana. But speaking of Ethereum and Solana, Ethereum was down 1.43%, at least at the time of the screenshot, and Solana was down 2.78%. When it comes to my open option positions, it looks like they're doing okay. My Sprouts cash secured put is doing pretty good. It expires this month. Same thing with my Nike 60 strike put. That one is doing okay. It's down about 50%. So I could close it and collect half of all the premiums. But honestly, if Nike goes down to like 59 again, I'll just gladly take the shares for $60. I was actually contemplating just going ahead and rounding out my share count to about 1,000 shares of Nike because it looks like retail and clothing stocks are doing very well right now. So I was just gonna boost my share count to 1,000, a nice round number, and then basically ride those until maybe $100 a share, somewhere around there. But I think I'm just going to go ahead and ride with these cash secured puts and then just think on expanding my margin even more just by Nike. But I also have a covered call on Palantir expiring this month and Nike at the 70 strike that I'm a little bit underwater on. When it comes to my top 10 positions, Robinhood is up 2.18%, absolutely carrying my account. Nike is slightly green, Palantir slightly green, Pepsi is slightly red, and SoFi is actually down big in the after hours. We'll get to that in just a second. But MAA, which is the REIT that I own, also down slightly today. And right now, Robinhood is hovering at around 135, 136. And honestly, there's a possibility that we could actually see all-time highs on Robinhood. So I said in the last video that Robinhood could either see $200 or $100 a share again, even though I still think 2026, 2027, we could see the market take a big dive. I think in the short term, there are some things that are looking good for the market. Well, also some bad, but there's a possibility for more rate cuts. More liquidity is flushing in the system, even though we're kind of in like that peaking period, right? 2026, as I showed you guys in my previous educational, like somewhat educational video, where I read you guys the thread that I posted on X with that chart of liquidity. 2026 is kind of like a peaking year, but it seems like there's a little bit more liquidity being pumped out in the short term, along with obviously Fed cuts. And don't forget the Trump accounts, right? The retirement accounts that are going to hit every kid born in some time frame. I forgot what exactly the stipulations were, but basically a bunch of babies are going to get little mini stimulus packages, right? Little mini retirement accounts, or maybe not for retirement. Like I think they're allowed to withdraw it when they turn 18 or something like that. I think that's a good thing for the economy and a good thing for Americans in general. But it is also a very good thing for Robinhood, because if you think about it, that's basically a pool of customers that don't yet know or realize that they're customers, right? But as soon as they turn 18 and they look at their accounts, they're already exposed to Robinhood. They're used to Robinhood. That's what their parents used, and that's what their money is on already. And think about all the people that right now, they either have a savings account, a debit card, or a relationship with a bank that is not the most beneficial for them, but they continue to stick through with it just because that's what they know, right? That's the bank that they've always used, their parents used. How many people right now do you know either use a debit card or like some weak a credit card that only gives them like 1% cash back, or they have their money in a savings account that's 0%? Like the list goes on, right? How many people you know right now that have things like that? Probably a lot. But the reason why they continue to stick through with it is because that's just what they know and that's what they're used to. Now, obviously, I hope Robinhood never gets to that point of complacency. I hope they continue to, always be the highest standard possible. But you combine that with people already being used to the Robinhood platform. That's a very sticky customer base that you have at birth. So I think these Trump accounts are very good, not just for the economy, but Robinhood specifically for the long term, both for the country and the stock. And as of right now, my Robinhood position is almost $250,000. And definitely over the long term, I fully expect Robinhood to be a $1 million position in my account. Right now, I think they're slightly above 100 million in market cap. Easily could be half a billion in market cap. Basically a Forex from here, which will put it at almost $1 million. So I fully expect Robinhood to by itself be a $1 million position in the future, but we'll see. Now, when it comes to some interesting posts that I saw on X, we have one from Robinhood actually, where they say traders on Robinhood think there is a 91% chance that a 25 basis points cut will occur this December. If we take a look at the chart, we can see that originally traders thought that the Fed was going to maintain, but then quickly the option for cut took the lead. So most people in the betting markets think that we're going to have a cut this December, which possibly could be a plus. But there is this other post that I saw from the same account, Robinhood, where traders think there is a 31% likelihood of a government shutdown on January 31st. Possibly we could see end of year rally, but we could also see an end of year correction going into 2026, especially if the likelihood of another government shutdown goes up. Or maybe not, right? Because most of the time the market just shakes it off, and we've already had a very long and drawn out one recently, so the market could possibly just shake this off, just like any other news that temporarily puts the market down. When more headlines come out, the market isn't really as affected anymore because that news is baked in. So basically, as of right now, I'm not really betting on a huge rally, and I'm also not really betting on a huge crash, even though both are a possibility. I would just, I don't know, I'm just more comfortable not going too hard on covered calls, but also not going too hard on buying calls, right? Like either selling or buying calls. But we have this other post from Unusual Whales on X that says Tether bought more gold last quarter than every central bank. And this is a chart from Financial Times. And as we can see, Tether bought more gold than Kazakhstan. I think that's how you say it. Sorry if I mispronounced it. More than Brazil, more than Turkey, Iraq, Guatemala. So tons of gold being bought by a stablecoin issuer, right? More than actual central banks. So I don't really know how to take this. It could be seen as like bad news, or this could be seen as manipulation in the gold markets, because I know there was some speculation. I'm not too familiar with crypto myself, but I did hear some rumors and speculation a long time ago that Tether was messing with Bitcoin heavily. So possibly this could be manipulation of the gold markets, not just with Tether, but with, central banks, big institutions, because keep in mind, gold has outperformed almost everything, it feels like. So definitely it could just be some manipulation. But instead of the money flowing into Bitcoin, it's now flowing into gold. But in other news, a little bit on the bright side, well, depending on who you are, it seems like Trump has legalized these mini Toyota trucks that are from Japan. And personally, I think they're super cool. I think I've seen this only once actually in real life. And honestly, I want one so bad, even though it's probably not the best vehicle or the safest vehicle to be driving. I just want one just because. And I heard talks that it could be at around 10 to 20 grand per truck. I'm not really sure about 10 grand, because if it is 10 grand, it's just going to sell like hotcakes. But 20 grand feels a little bit more realistic, where it's not too expensive. It's a bit more affordable, but at the same time, people will have to think about spending 20 grand before buying like a very tiny truck that may not be as useful as they thought, if that makes any sense. But definitely, I want one of those Toyota trucks. Now, in other news, we have two posts from Kalshi that says Meta to cut metaverse spending by 30%. And I think it's a good thing, just personally, because I don't really use Meta's metaverse products. Honestly, I don't even have an Instagram account. I do use WhatsApp sometimes, but I'm not a very like Meta social media type of person, like Instagram, Threads, any of that. But I do have a little bit of the stock. I think in the short term, Meta can fill that gap that's on the chart. So overall, I think this is good news for the company. But in other news, we have 191,000 people who filed for unemployment this past week, below expectations of 219K. So it seems like the economy is doing a little bit better if you just take it at face value regarding this post. Like, obviously, we see like other posts on X where it's like doomsday. So just goes to show you guys there's like two sides to the news, and not to just believe anything, any one post that you see. And now to speak on SoFi a little bit. So they did go down about 4% in the aftermarket, mostly because of them selling shares, about $1.5 billion worth. Obviously, if you're a big SoFi bull and you've been avoiding Robinhood stock, this is not the best day for you. But I don't think this is the end of the world for SoFi. Now, I still think SoFi is lagging a bit when it comes to their margin rates. Obviously, when it comes to their savings account, they're ahead of Robinhood because their rate right now, correct me if I'm wrong, but it's 3.6% on their savings versus Robinhood's 3.5%. So you're getting slightly more for savings on SoFi, but you're also paying you're basically paying double in margin. And to get the 5% margin interest rate, you have to have $10 million in the SoFi Invest account, which is crazy because I currently have 5% in my Robinhood account, and I do not have 10 million. So SoFi definitely seems a little bit more greedy than Robinhood, but I still think it's below I think Schwab and Fidelity. I haven't checked Schwab and Fidelity, but I think the last time I checked, they were like 12, 11%. So definitely SoFi is cheaper than the traditional brokerages, but way behind on Robinhood. And just to quickly plug my X account, if any of you guys use X, but you don't yet already follow me, I don't post a whole lot. I don't spam. So you guys don't have to worry about that when it comes to me. If you just want to see some interesting posts, the few times that I actually do post, then you can just go ahead and follow me. But if not, that's also cool. When it comes to comments on my previous video, I did get a few interesting ones. We have Triangle and Sky that says, what do you think of Bull? Should I get in now before it runs up like Hood did? Now, I have seen a lot of people talk about Bull because it does look similar to the chart of Robinhood before Robinhood had that huge massive run up, because Robinhood initially tagged, I want to say 80, 85 a long time ago before it crashed 90% all the way down to like $8 a share, of course. And it looks like that's what webull is doing right now, where I want to say they tagged like $90 and now they're all the way down to $9. But if you want my personal thoughts on webull, it is not the same as Robinhood, unfortunately. I know that might not be the news that people want to hear right now, especially if you're a bull. But when I was buying Robinhood at $10 a share, their free cash flow per share, the yield was 10%, right? So they were making at least $1 in free cash flow per share at $10 a share. Their 5-year revenue growth trend was upwards, right? I think they had a couple years where they were stagnant, but they swung it right back up. When it comes to webull, their revenue has been flat, while Robinhood's has been growing tremendously, right? So keep that in mind. That is very interesting. Their tangible book value is negative $5 a share versus Robinhood. I want to say their tangible book value was like $10. So they were trading at $10 a share, and their tangible book value was $10 a share, and they were also buying back shares. So just to refresh your guys' memory a little bit, they did buy back those shares from SBF, right, when he had all that trouble going on, and that was like a dark cloud hanging over Robinhood. Robinhood said, hey, we'll just buy back those shares so people stop worrying about us, and people stop, putting our name in the same sentence as SBF. We'll just go ahead and buy back those shares. And on top of that, we're just going to do another buyback program to give our investors a lot more confidence. So they made the right decision there. And I also believe Robinhood's short interest was much higher than webull's 2.41%. Now, obviously, Grok is not 100% accurate. Some of these numbers could be off. Some of them could be miscalculations, but just looking at it in general, or even without the numbers, I just wouldn't touch webull because I'm already a big shareholder of Robinhood, and I just don't understand the mentality of going for number 2 just because you think it's going to have a similar move to number 1, if that makes any sense. If I right now missed out on Robinhood's massive upward trend, what I would be doing if I really wanted to be a Robinhood shareholder would just be trade my way into it. We got TDTY, who is an OG of the channel, making another very long comment that says, bro, these people selling covered calls are absolutely clowns. They have no experience, and if they did, they would know never cap your gains, especially through a red tape. Hood can easily move $10 or more in a single day. I've been collecting freemium through this entire downtrend the past couple months. I kind of like that word freemium. I've never seen that before, but I think I'm going to steal that. But anyways, my downside is cushion and cash in hand. Someone who is smart like me keeps the strikes far out the money. For example, I had 150 strike calls expiring 12/5. My shares are scot-free for next week if Hood miraculously hits 150. Plus, I'll gladly reset with profits, premium, and cash in hand. Now, when it comes to my shares, I don't really feel comfortable selling covered calls right now because I do see a possibility of it hitting all-time highs once again. But definitely, I do agree with you there. I don't understand people that sell covered calls on a red day or on a big down day on a specific stock that they're selling covered calls on. But that's one of the things that's kind of cool about being in the market for a long time and just I mean, I know this is going to sound cringy or whatever, but just not quitting, right? Just staying in the market and just being kind of neutral and just observant of everything. One of the benefits of that is you can kind of pick out the people that are new and don't really know what they're doing, even if they seem like they're experienced and older than you, if that makes any sense. Like, I know there's some YouTubers that I'm not going to name just because I actually kind of like them. But the point is, there have been some YouTubers that I saw that I actually do enjoy watching, and I think they're very smart. But when I see some of the moves that they make, it's like, why would you do that? Like, why would you sell covered calls on Palantir when it's having this huge, massive upward trend? And obviously I sold covered calls too, but I was okay with it, right? But I'm talking about people that literally sold covered calls on Palantir on that huge wave up, and then they either buy back those covered calls or they buy even more shares at high prices. Like, that just doesn't really make any sense to me. And shortly after, TTY makes another comment. He says a big boy word, so I just went ahead and censored it. But he made that comment before you saw my reply. But you say, quote, "I'm very confident in my ability and my convictions in my stocks. If we see a nasty red tape, I sell my freemium, longer dated, and still has juice. During the bull runs, I massively outperform, and during the bear ones, well, I haven't seen a nasty one yet, but I'm trying to prepare now mentally and physically by getting portfolio set up in a way I can still survive even a bear market. I need to manage my risk, my leverage, and my ego, and I can solve my financial troubles." Well, first of all, if you have financial troubles, you probably shouldn't be using leverage. I'm not sure if that's what you meant, but there's like no commas or anything in your comments, so it's kind of hard to read sometimes. But definitely, I think you are off to a good start. If I remember correctly, you've been in the market for 2 years, you're 23, almost a quarter mil. So I think you're off to a good start, but definitely you need to go through some bear markets for you to like fully appreciate them. And I know I need to hedge a little bit too, because I kind of go crazy, and I'm kind of going crazy right now because I don't have any covered calls on my number one position that is very highly volatile, high beta. But it is what it is. I mean, if I get margin called, screw it. You know, I'm still going to post the video. So definitely not financial advice. But anyways, one of the reasons why I think we could see an end of year rally is I see a interesting setup on multiple stocks. And what I mean by that is a big gap above periods of consolidation. So just some examples are Honest Company. Obviously, it hasn't been the best stock to own, but there is a gap at least to that 5 or that 350. Sorry, my old price target was 5, and it kind of pains me to see that $5 mark, but around like 350, right? We see that gap. We see Royal Caribbean has one gap at around 275, and then another one at around 5 or 315. And then we see Norwegian Cruise Lines, another gap at around 2150, and then $23. We see Sprouts Farmers Market, gap above $100, and right now it's at 85, so decent setup here. We have Chipotle gap all the way to $40 a share. Interesting. Cava gap all the way to 60. We have Walt Disney gap all the way at that 114 level. And of course, we got the big boy Meta gap is around 730. So definitely lots of stocks with interesting setups, big gaps, which is one of the reasons why I think we could see an end of year rally. But who knows? Like I said, anything could happen this year. Going into next year, Robinhood could see $200 a share, or it could see $100. It is what it is. If I get margin called, I'm still going to post the video.